It is 9:37 a.m. Pacific Standard Time. It is the 16th day of February 2026, and this is episode 1258 of Bitcoin and... OpenAI has absconded with the OpenClaw founder. That's going to be our first story of the day here on all the news that you can use with me, your host, David Bennett, on the Bitcoin and podcast, giving you news from around the world about Bitcoin and macroeconomics. Metaplanet, a $620 million net loss. Not looking good. I know. Look, we get into these troughs, man, with Bitcoin. It's not that it's not that it's easy. It's just that it happens. And this is where not only do things get built, we always say that, oh, now it's time to build. Yeah, but it's not just projects that are going to get built here. It's going to be your own personal stamina, because Harvard cut their Bitcoin holdings by 21%, as if to, I don't know, thumb their nose at us or something like that. But you just can't write this shit. They bought something else, and I'll tell you about it when we get there. Adam Back is opposing the BIP 110 ordinals fix. That should be interesting to get into. And then strategy to equitize its convertible debt over a 3 to 6 year period, according to Saylor. And Saylor, of course, I guess he buys more Bitcoin. Anyway, he signaled it anyway. So I don't know if he's actually done it or not yet. South Korea lost some Bitcoin. Their police can't seem to keep a hold of the Bitcoin. It's just odd. And Russia, there are some serious people in Russia buying a lot of cryptocurrency, or at least they are moving a lot of cryptocurrency every single day. That's going to tap us out for the show. But speaking of tapping, OpenAI taps OpenClaw founder to lead push into personal AI agents. Vince D'Aquino from Decrypt.co starts us out this morning. OpenAI has brought on OpenClaw founder Peter Steinberger to lead its push into personal AI agents, as CEO Sam Altman positions multi-agent systems at the center of the company's next product phase. Steinberger will help build, quote, very smart agents interacting with each other to do very useful things for people, end quote, Altman announced on Sunday, adding that the effort is expected to become core to the company's product offerings. Altman said OpenClaw would become a foundation-run open source project supported by OpenAI, reflecting the company's belief in an extremely multi-agent AI future. Let's pause, shall we, to remind ourselves about the OpenAI Foundation when it was first founded by Sam Altman and Elon Musk and a whole bunch of other people. And we can say what we want about Elon Musk, but he bailed on that foundation when Sam Altman decided to make it not an open source company, but a private company. Do you think for a second and a half that this OpenClaw thing is going to stay an open source situation? I would bet against that. I would definitely bet against that. Let's continue on. An AI agent is a system designed to take actions on a user's behalf, such as sending messages, booking services, or managing tasks across apps, instead of just responding to prompts in a chat window. Agents are typically built to connect to external tools, carry out multi-step instructions, and operate with some level of autonomy. Quote, what I want is to change the world, not build a large company, and teaming up with OpenAI is the fastest way to bring this to everyone, Steinberger wrote in a separate blog post announcing the move. The confirmation comes just days after Steinberger said he had received acquisition offers from Meta and OpenAI, and that he would only agree to a deal if OpenClaw remained open source, citing a governance model similar to that of Chrome and Chromium. Yeah, well, we'll see. OpenClaw gained traction by enabling persistent agents that connect to messaging platforms and external services, allowing users to run task executing bots locally rather than relying solely on centralized chat apps like ChatGPT or Claude. Steinberger said, turning OpenClaw into a foundation would allow it to remain a place for thinkers, hackers, and people who want a way to own their own data, end quote. While only a few months old, the platform has already drawn scrutiny from some of the industry's largest players. Last month, Anthropic sent Steinberger a trademark claim arguing that Claude, the name, was too similar to Claude, the other name spelled differently, and said it had no formal partnership with or endorsement of the project, clarifying that API access does not imply affiliation or approval. Quote, smart move by OpenAI, though I'd argue Anthropic should have got there first. Dermot McGrath, co-founder at strategy and growth studio Zengen Labs, told Decrypt. Well, I'd have to agree. The concern, McGrath said, is what the support could mean for OpenClaw. Quote, open source or not, these projects live and die by a handful of dedicated full-time contributors, and Steinberger is the father of OpenClaw, McGrath said. Quote, OpenAI says they'll continue to support it, but a big question remains on how much attention the project actually gets once they're building proprietary products, end quote. Whether OpenAI's backing can sustain the project's momentum remains unclear. But given Steinberger's goal of building an agent even his mom can use, McGrath said he expects to see, quote, very cool stuff coming out of OpenAI soon, end quote. Community directories list over 100 agent skills and extensions that are continuously being built around the project, with a growing ecosystem of contributors and third-party integrations. The project has continued shipping updates, including a new beta release focused on security and bug fixes, as well as the addition of Telegram message streaming. That's the end of the article, but holy crap. There's so much here that it's not that it's like, I don't know, wrong or negative, but let's peel back some of these layers here. You got a guy who just a couple of months ago drops this whole Moltbot thing, which I don't know, it was Claude, CLAWD, and then Anthropic got their panties in a snitch and decided to, I don't know, reach out and bitch slap our guy Steinberger there for that one. So he changed the name to Moltbot or something like that. And then all of a sudden it changed into what we now know as OpenClaw. And the traction that it gained immediately was extreme. Everybody seems to be using it. Hell, I've even got it on my laptop. I just haven't been able to do anything with it yet because I'm just not that savvy about this stuff. And I'm also I kind of want it to be able to crawl my Obsidian repository, but I'm not sure if I want to give whatever LLM that I choose to be used by the agent. I don't know if I really want them to have all that information. I've got very large Obsidian repositories, like all of books I've read, notes that I've taken, the transcripts of all my shows, like all kinds of little notes that I've written. And I'm not exactly convinced that it would actually just stay, all on my computer. Be that as it may, given that, this thing has gained an extreme amount of traction already. It's one of the most explosive things that I've ever seen. It's really, I hate to say it, but it's really impressive. I mean, not the tech. I'm talking just strictly how much traction it's gained and how quickly that traction has been gained. These things don't come around very often. So when people say, well, will OpenClaw still support it? That sounds to me like what they're expecting is that, well, not OpenClaw, OpenAI. Will OpenAI still support the project that has become OpenClaw? And I think what they're trying to suggest is that OpenAI bought this thing essentially in a way. They at least bought the guy because they're probably going to pay him a shitload of money to come on board and bring that project with them. Did they do it just to kill it? I don't think so. I don't. I think that we've seen this before. And yes, there are many times when a company will buy something that looks like it could encroach on their territory simply to kill it dead so that they don't have to deal with the competition. In this particular case, I don't think that's what's going to happen. And the fact that it has so many open source contributors to its name already, I don't think OpenClaw is in any danger whatsoever of going away. In fact, I think it's just going to get bigger. I think the only threat that's on the horizon is that it does not remain open source. I think that that's the real issue here. Everything else is probably, they didn't buy it to kill it. And I don't think that they even really need to support internally, other than paying Steinberger probably, an immense amount of cash. I don't think they have to spend that much money to actually support the development of OpenClaw at that point, because they've got a bunch of people that are already doing it open source as it is. So we'll have to wait and see, but no, I don't think OpenClaw is going in. I don't think it's going away. Too many people are having way too much fun with it. Is it dangerous? Maybe, but that's not really the point right now. Too many people are having too much fun doing all kinds of neat shit with it. And some of the shit that I've seen is neat and useful. There's some high utility stuff that's actually being done with it. Once you end up in a phase where you see utility in a tool, you're not going to be that quick to throw that thing away. It's like, would you throw away your only flathead screwdriver? Probably not. Just saying, tools are tools. Now, speaking about a bunch of tools, we got MetaPlanet over here that posts a $619 million net loss, not a net loss, on their Bitcoin valuation as holdings climb to 35,102 Bitcoin. So not only did they lose a shit ton of money, they bought more Bitcoin, which is, I guess, good. I don't know. The whole treasury company thing, I kind of wish it would have never really gotten the amount of legs that it got as fast as it got them. But the Tokyo-based Bitcoin treasury company MetaPlanet reported a net loss of 95 billion yen, or about $620 million, for the fiscal year ending December 31st, swinging from net income of 4.44 billion yen in 2024, according to its fiscal 2025 earnings presentation released on Monday. The loss was driven by a $665 million valuation loss on its Bitcoin holdings, which the company classifies as non-operating expense with no impact on cash flow or operating activities. Despite the bottom line volatility, though, the company emphasized that the resilience of its capital structure. MetaPlanet noted its balance sheet remains fairly robust, with liabilities and preferred stock fully covered, even the event of an 86% BTC price decline, supported by an equity ratio of 90.7%. As of December 30th, December 31st, the company reported liabilities of 46.7 billion yen, or $304 million, in net assets of $2.99 billion, with its Bitcoin holdings valued at $3.1 billion. On operations, MetaPlanet's revenue for fiscal year 2025 reached 8.91 billion yen, or $58 million. That's actually up 738% from $6.9 million in the prior year, while operating profit surged to $41 million from $2.28 million. That is a 1,695% increase, according to the document. The company said its Bitcoin-related operations generated 8.4 billion yen, or $55.2 million, in revenue, and $46.8 million in operating income, driven primarily by premium income from Bitcoin operation or option transactions. So they're making money trading. According to the financial disclosure, Metaplanet surpassed its fiscal 2025 target of 30,000 Bitcoin, ending the year with 35,102 Bitcoin. That is an 1,892% increase from 1,762 Bitcoin at the end of, 2024. That represents approximately 0.16% of the total Bitcoin supply and makes Metaplanet the fourth largest public company holder of the asset globally, while the firm's stack remains a fraction of the 714,644 BTC held by Strategy, valued at $49.6 billion, according to the block's data dashboard. Metaplanet has set a long-term acquisition goal of 210,000 Bitcoin, representing 1% of the total Bitcoin supply. To fund this expansion, Metaplanet said it raised $3.37 billion cumulatively through the end of 2025, including $138 million for the December issuance of Class B perpetual preferred shares. For fiscal year 2026, the company forecasts revenue of $104 million and an operating profit of $74.3 million, representing year-over-year growth of 79.7% and 81.3% respectively. Metaplanet said it is not providing forecasts for ordinary income or net income due to Bitcoin price volatility. What does this mean? It means they lost their ass holding Bitcoin because of the October 10th and beyond crash to the Bitcoin price that we have now. But their operating revenue, or their revenue generation, is actually increasing. And it seems that they're doing that with trading in options, which I don't know. I don't like that because it's all paper Bitcoin. It's all paper. I mean, I talked to you about, what was it, Bitfills or something, like whatever loan company I was telling you about last week that temporarily suspended withdrawals and deposits. Yep, they're probably insolvent because they were rehypothecating Bitcoin. They said they had like this amount of Bitcoin and they had nowhere close to that amount of Bitcoin. It was the same bullshit that, whatever that loan company was that blew up with FTX and Alameda Research. What was it? Oh God, I cannot remember the name of it. But they were doing the same thing. And they just couldn't meet the obligations that they had. This is what paper does to everything. Whether it's dollars, oil, precious metals, any other of the commodities, it's all bullshit. This is why, and people like, I never end up out of getting into fights with people about, well, it's price discovery. No, it's not. I'm sorry, it's not. Price discovery is, hey, I need oil and I need it this badly. This is the amount of money that I have. The person with the oil understands the argument that's just been made and makes a deal as to what price they want for theirs. And through the back and forth of those two people in the physical settling of a physical good is a price discovery actually had. Futures, options, all like derivatives, it's all bullshit gambling. And most of it is stacked on top of fake commodities, fake goods. People say they have this stuff, they really don't. And it's just a dangerous situation all the way around. And that's one of the reasons why the financial system in the world is just rocky AF. It's all fake. It's all fake, man. It's sad, but it's the world we live in right now. And Harvard isn't escaping it either. They've trimmed their Bitcoin ETF holdings by 21%, but they build an $87 million Ether position. Okay, this is just out of the frying pan into the fire kind of bullshit. This is demonstrative of shitcoinery and its promise of shiny, beautiful things. And it just never, ever happens. Even the people behind the fund at Harvard don't get it. That's where we are right now. This is from the block. Brian Danga is writing this one. Harvard Management Company pared its Bitcoin exchange traded fund holdings by more than 1/5 during the fourth quarter while establishing its first position in an Ether ETF, a shift disclosed in a quarterly filing that shows the endowment held a combined $352.6 million of exposure with the two largest digital assets. The Ivy League Endowment's investment manager held 5.35 million shares of BlackRock's iShares Bitcoin Trust valued at $265.8 million as of December 31st, according to a 13F filing with the SEC. The position represents 1.48 million shares reduction from the prior quarter when Harvard reported 6.81 million shares worth $442.8 million. Harvard simultaneously opened a new $86.8 million position in BlackRock's iShares Ethereum Trust during the quarter, acquiring 3.87 million shares, the filing shows. The Ether investment marked the endowment's first publicly disclosed position in a fund tracking the second largest cryptocurrency. The changes came during a volatile quarter for cryptocurrency markets, and then they talk about the prices and all that stuff, and we already know about that. But despite the reduction in price, Bitcoin remained Harvard's largest publicly disclosed holdings as of December 31st, with the $265.8 million position exceeding the endowment's stake in Alphabet, Microsoft, and Amazon, according to the filing. Meanwhile, Harvard's crypto strategy has drawn scrutiny from academic observers, according to reporting from the Harvard Crimson on Monday. Andrew Siegel, emeritus professor of finance at the University of Washington, described the Bitcoin investment as risky and noted it was down 22.8% year to date. Siegel added that the risk of Bitcoin is, quote, partly due to its lack of intrinsic value. I need to pause. An emeritus professor, and if you don't know what emeritus means, he doesn't really teach classes anymore. He's old. He's probably in his 80s or mid 70s at this point. You still get paid at the top end of a professor scale, but you don't teach classes unless you really just want to. Basically, what you're doing as an emeritus professor is whatever you want to do, and they pay you for it. And you're going to work there until the day you die. You don't even have to retire if you don't want to. That's what emeritus actually means in the academic field, especially when it comes to emeritus professor. So here's a guy who's probably in his late 70s or early 80s, doesn't teach class, most likely. Maybe he runs a research institute, at the University of Washington. It doesn't matter, because this guy has two arguments: lack of intrinsic value and this last year's performance. This is the quality of an emeritus professor of economics and finance at the University of Washington. This is not quality material at all, people. Watch out when all these PhDs as well, you don't have a PhD, so you don't have a right to talk about any of this. Oh, bullshit. I can read. Fuck, these people they come out of the woodwork this way. And here's another one. There's no way I can pronounce this name, but it's like Avindahar Subramanian, a professor of finance at UCLA, wrote that the addition of Ether amplifies his reservations about the endowment's digital asset strategy. He considers cryptocurrency an unproven asset class where valuation methodology remains unclear, adding that his prior skepticism towards Harvard's Bitcoin investment had been validated by subsequent performance. Again, a professor of finance at UCLA doesn't quite understand that you can zoom out and look at a 17-year-old asset, but you're only looking at the last year. You're not looking at anything else. You're just looking at the last year. That's as far as the research these people are willing to do goes. It's kind of sad. Makes me feel a little dirty, which is why I use SoapMiner soap. SoapMiner.com. Go to SoapMiner.com. Get yourself some handmade tallow soap. Our natural soaps are the heart and soul of our brand. Each bar is meticulously crafted using only the finest ingredients, sourced sustainably to ensure that we're kind to both your skin and the environment. We're committed to transparency and quality, so you can trust that each product is free from harmful chemicals and artificial additives. Indeed, if you actually go and you look at their basic soap, it consists of 3 ingredients: water, 100% pure grass-fed beef tallow, and sodium hydroxide. Well, that's a chemical. Yeah, so is dihydrogen oxide. That's water, by the way. Everything is a chemical. What he's talking about, there's no parabens. There's no funky, acetyl acetate shit in a soap. It's just sodium hydroxide. It's as easy as it's a sodium molecule with an OH, with an oxygen and a hydrogen hanging off of it. That's all it is. And fat, which is a long chain hydrocarbon. And water. That's all this soap is. It's the cleanest soap you're ever going to get. And if you want something more, if you want like soaps that have scent in it, get his cedarwood tallow. Dude, the cedarwood tallow soap is so far my favorite. I haven't used the pine tar tallow soap. I haven't used goat's milk or the orange clove tallow, but I have used the lavender and the lemongrass and the tea tree. It's all wonderful soap. If you want to get your hands clean and soft, because it's sort of like using lotion, it's that tallow, man. It makes your skin soft, and it also makes it clean. Then you need to go to SoapMiner.com. Go to SoapMiner.com. Make sure you use, what am I trying to say? Oh, the coupon code Bitcoin and you will get 10% off your entire purchase. That's SoapMiner.com. Use the code Bitcoin and you'll get clean. Get away clean with SoapMiner.com. Hey, solution worse than the problem? Well, Adam Back opposes BIP 110, which apparently fixes ordinals. I don't know exactly what it does. Let's find out here from Cointelegraph. Blockstream CEO Adam Back has opposed a proposal to reduce ordinal-like spam on Bitcoin, warning that the fix could actually do more harm than good to the network's credibility. Bitcoin improvement proposal BIP 110 was proposed by pseudonymous Bitcoin developer Dathon Ohm in December. Nearly 7.5% of Bitcoin nodes have signaled readiness for BIP 110, according to data. Oh, this reminds me of the user-activated soft fork. The proposal seeks to temporarily shrink how much data can be stored in Bitcoin transactions to reduce the amount of images, videos, audio files, and other data abuse flooding the network. While Back agreed that Bitcoin should act as sound money, he said in a post to X on Sunday that it wasn't worth a consensus-level change, adding that BIP 110 would be an attack on Bitcoin's credibility as a store of value and secure monetary network. Quote, "It's a lynch mob. It's a lynch mob attempt to push changes there is not consensus for," he said, adding that spam is just an annoyance and poses no real security threat to the network at all. BIP 110 is only a temporary fix to reduce arbitrary data intended to give the Bitcoin community time to evaluate the impact for 12 months while developers work on longer-term solutions. The BIP has gained more support from validators running Bitcoin Knots, which started taking market share from Bitcoin Core back in the back half of 2025 when Bitcoin Core developers removed the 80-byte limit from the op return function in late October, enabling more non-financial transactions to flood the Bitcoin network. Bitcoin Core's market share of Bitcoin nodes has fallen from about 98% to 77.2% since the controversial op return function sparked debate in the Bitcoin community over what transactions should be allowed on the network, with Bitcoin Knots share rising to 22.7%. Adam Back is among many who opposed removing the 80-byte limit on the op return function, stating in September that ordinals like span has no place on the time chain. However, he flagged that a solution like BIP 110 has the potential to freeze funds by rendering certain unspent transaction outputs unspendable. Ohm acknowledged that it is theoretically possible for funds to be frozen, but added, quote, "This proposal goes to great pains to avoid affecting any known use cases." Those in favor of non-financial transactions like Bitcoin Ordinals leader Leonidas have noted that the Ordinals and Runes ecosystem have contributed to over $500 million in transaction fees to strengthen Bitcoin's security, something which has become an increasing concern as the mining block subsidy continues to have every 4 or so years. However, Dune analytics show that the Ordinals inscription fees were consistently netting less than $10,000 per day for Bitcoin miners by the end of 2025, making it difficult for them to rely on non-financial transactions for revenue. Ordinal activity peaked more than 2 years ago, with Bitcoin miners collecting almost $10 million in fees on December the 16th, 2023, and since then fees have trended downward except for a few short-lived spikes. Yes, ordinals are crap. They are garbage. They have no place on the time chain, and I agree 100% with Adam Back. Especially if it's even theoretically possible to freeze even one UTXO, this BIP has no place. This has no place whatsoever in Bitcoin. I get what Luke Dasher is trying to do. I mean, I totally understand it. And honestly, I'm kind of empathetic because ordinals and runes are garbage. Non-financial transactions have no place whatsoever on the Bitcoin time chain. And then the first thing that we need to remember is that the very first transaction on the Bitcoin time chain was Satoshi himself basically putting into the block header. This is the very first block, not maybe the very first transaction, but the very first block ever mined has the London Times headline in it. That is a non-financial transaction. How are we supposed to think about this? It's no wonder all these people are fighting with each other because we're not even people that are like me that are siding with Adam Back on this understand that the very first block has within it a non-financial thing. What are we, how are we to think about it? It is a philosophical debate that is worthy of discussion. It's worthy of having long discussions about, and it probably will result in a whole bunch of continued infighting. And that's okay. I think that that's where I'm really falling here is that that's okay. People are going to fight. Oh my God! If it gets too bad, then you're going to be talking about a chain split, and there's going to be another Bitcoin chain. Okay, it's not like we haven't had them before. Remember Bitcoin Gold? I think there was Bitcoin Diamond, there was Bitcoin Silver, there was Bitcoin Rhodium. Oh my God, Bitcoin Rhodium, and a guy. Oh, he was an older gentleman. He was a trader. He got into Bitcoin and he was all about the 21 million Bitcoin cap. I mean, he was like an Austrian economist and he threw all of his money behind Bitcoin Rhodium and lost it all. And I can't remember the guy's name. If you remember who I'm talking about, let me know with a boost or something like that. But it was one of the saddest things that I've ever seen in my entire life is that he got roped in to getting into fake Bitcoin because it was a chain split. If somebody had forked Bitcoin and created Bitcoin Rhodium, Bitcoin forks are going to happen. You just have to be aware. BTC is the only ticker symbol that you need to know. Let's run the numbers. CNBC futures and commodities. West Texas Intermediate oil is up 1.5 points to 63.83. Brent North Sea is up 1.5 to $68.72. Natural gas is the hedge, 5.46% to the downside, now at $3.06 per thousand cubic feet. Gasoline up 0.8% to $1.92 a gallon, and Murban crude is up 2/3 to $68.78. Shiny metal rocks having a bad day, all except for palladium, 3.88% in the green. Gold is down 0.7%, just peeking its head back up above $5,000. Platinum is down 1.3%. Silver is down 2 points to 76.46. Copper is down 0.6% itself. Ag is, I don't know, there's a lot of stuff that's saying is unchanged, so this may be because it's President's Day. Who actually knows? Cocoa is down 1.1%, and the biggest winner is sugar, 0.87% to the upside. Everything else is unchanged, as is live cattle, lean hogs, and feeder cattle. Now, the S&P, some of the legacy markets, are showing activity today. I don't know if they're actually open or what, but we'll read them. S&P is up 0.05%. NASDAQ is down a quarter. The Dow is up 0.07%, and the S&P Mini is down 0.28%. One market that is always open is Bitcoin, $68,070. It's a $1.36 trillion market cap. We can get 13.6 ounces of our favorite shiny metal and paper rock with our one Bitcoin, of which there are 19,990,235.5 of, and average fees per block are super low, 0.01 BTC taken in fees on a per block basis. Guys, there's 5 blocks carrying 10,000 transactions waiting to clear at high priority rates of 1 sat per VByte. Low priorities get you in at 0.1. And hash rate is up to 1.06 zettahashes per second. Friday it was 1.01, so still a V-shaped recovery on mining. Kind of interesting to see. From Quantum Bitcoin, Friday's episode of Bitcoin and Jay with 2100 sat says, thank you and hope you had a great Valentine's. I did. I for the first time in years, I decided to not treat Valentine's Day like a sham and actually give it some attention. Actually, I was giving my wife some attention as far as Valentine's Day is concerned. And I got her candy. I got her roses. It was a great day. It actually was a great day. So I don't care if Hallmark is scamming us to buy cards and boxes of candy. I don't care. I had a great day. Jay with another 2100 sat says, thank you, my goodest sir. Oak Grove with 1257 says, don't know if this is a hot take or not, but if a police it gets himself carjacked, that should be an automatic demotion. Yeah, probably. I don't know what police it means. I think policeman or something like it. Yeah, but if you're a cop and you get carjacked, yeah, you should probably get a demotion. Wartime with 133 says, hello, governor. And then Nostergang with 111 sats. Short row sticks says, thank you, no thank you. Jay with 2100 says, thank you, no thank you. Epsilon 01 says, the contrast in today's topics is fascinating. Between the CFTC advisory tensions and Binance removing internal investigators, it feels like we're watching institutions recalibrate in real time. At what point does regulatory uncertainty become a competitive advantage for Bitcoin rather than a liability? The answer to that, my friend Epsilon, is I don't know. Everything is really confusing, and it ain't just about Bitcoin. It's about nobody knows what to do with money at this point. Everybody is confused. Jason High with 250 sats says, boost. Nick Dose with 150 sats says, cheers. Aaron Joel with 172 says, my wife requested a fern to hang under the skylight and over the tub in our master bath for Valentine's Day. I got her that, a yellow rose bush and deep red tulips, and it's all going to zero. Aaron Joel, are you tulips or did you steal tulips boost from last week? I don't know. But Nakaz 18 with 100 sats says, live aloha. And that's it for the weather report. Remember to support the show with Boost and streaming. Use a Podcast 2.0 enabled podcast app and stream Satoshis, because we've got to continuously use the Lightning Network. The more usage the Lightning Network gets, the more stable it becomes, the more people gravitate to it. I've already had a couple of more new channels open to my Bitcoin Lightning node, and I didn't even ask. It was just people found the node online and decided to connect, and therefore I have more incoming liquidity than I had before, and it's honestly great. So boost the show. In other words, donate, because that's how I can like at least try to pretend like I can pay some bills around here, and stream Satoshis, because both ways use the Lightning Network, and the Lightning Network is not to be forgotten about. It's one of the things that I kind of worry about, is that we have a tendency to get apathetic if we don't continuously talk about this stuff and use this stuff. So use the Lightning Network, stream me Satoshis, and boost the show. Welcome to part 2 of the news that you can use, where Strategy is going to equitize its convertible debt over a 3 to 6 year time period, according to Michael Saylor, which is Strategy founder. He revealed the firm's plans to convert its $6 billion in bond debt into equity, a move that reduces debt on the balance sheet. Quote, Strategy can withstand a drawdown in Bitcoin price to $8,000 and still have sufficient assets to fully cover our debt, stated the firm on X on Sunday, prompting Saylor's response. The Bitcoin Treasury Company currently holds $49 billion in Bitcoin reserves, with a stash of 714,644 Bitcoin. Its convertible debt is around $6 billion. That's with a B. So Bitcoin would need to fall to around 88% of its current value for the two to be equal. And it still has enough money to cover the debt, according to the firm itself. Equitizing convertible debt means converting the bond debt into equity as stock shares rather than repaying it in cash, essentially turning bondholders into shareholders. I need to pause. Why would you work a day in your life for a piece of paper that someone can just print? Now, we hear that argument all the time when it comes to fiat currency. I smell the same philosophy undergirding this potentiality of MicroStrategy or of Strategy, because he can just print those shares. He would not only would he convert that debt into equity and basically free himself from that debt burden by printing shares, but at the same time, he'd not only be, what do we call it? Oh God, what's the term? I can't remember the term. He basically sort of like lightening up the value of the shareholders already. There's a word for it, and I'm completely anaphasic at this point. I cannot remember the word. It's not good. I don't like this. I just don't. I don't like this idea. I mean, it sounds good on paper, and I'm sure a lot of the people that don't understand exactly what he's doing go, oh, well, yeah, that's going to be great. No, because you're just printing shares to get rid of your debt. How is that unlike fiat currency? Which is exactly what Michael Saylor is trying to gird himself against with the whole theoretical of buying Bitcoin in the first place. See, I don't like this. He can just print the shares to take care of the debt. It's, God, anyway. Let's see. Saylor signaled another Bitcoin buy. The purchase would mark 12 consecutive weeks of buying as the company continues to accumulate, despite a sharp decline in the underlying asset. And then they go into some other stuff. The only real thing that we have here is that he's talking about printing shares to convert the bond debt that he issued into shares. So he's actually kind of already printed the bond debt. He just spun that up out of thin air. And now he wants to spin up more shares, more Class A shares of Strategy stock out of thin air to convert what he already, do you see how this works? This is no different than the Treasury Department just printing Treasury bonds and people like Tether buying them and issuing new Tether. It's the same shit. Again, this collapses right back into what I was saying earlier about derivatives, options, futures contracts. It's all crap. It means nothing. Now, to the people that make a shit ton of money on it and actually buy real things like houses and land and boats and I don't know what else, yeah, they're the lucky ones, probably because they had insider information that they could trade on. But for the rest of the schmoes out there in the world that do not have access to that kind of vital information, forget about it. You're not getting shit. You know, all these fucking people just need to be thrown in a goddamn volcano and left to burn. Holy shit. And Michael Saylor has, again, signaled another Bitcoin buy amid the market rout, but I still don't know if he actually has bought any or not. So let's just move on past all that crap into South Korea, where the police lose 22 Bitcoin. They've seized it in 2021 and kept it since then, and now it's just mysteriously disappeared from the Gangnam police station. Worth approximately $1.5 million, it was stored in a cold wallet on a USB device. According to local news outlet Donga, the Seoul Gangnam police station has lost its 22 Bitcoin that were seized during an investigation in 2021, and 1.5 million worth of Bitcoin were transferred from a USB cold wallet without the physical device being stolen. The Bitcoin had been handed over to the Gangnam police in November of 2021, but the loss went undetected because the investigation had been suspended. A recent internal investigation discovered that the funds had been withdrawn from the wallet despite the physical USB never being taken. The Gyeongbukbu Provincial Police Agency has launched an internal investigation to determine the exact circumstances of the loss and verify potential internal involvement. Yeah, it was an inside job, all right. An agency representative declined to comment. The loss was discovered during a nationwide inspection of investigative agencies triggered by the recent loss of 320 Bitcoin at the Gwangju District Prosecutor's Office, which I reported on a couple of weeks ago. According to local reports, Gwangju investigators responsible for managing evidence lost the seized Bitcoin after mistakenly accessing a phishing website. Here's what I think happened. There was nothing accidental about accessing the phishing website. It was just cover to transfer that Bitcoin from somebody inside the police station to get it out of the police station, and they can just say, well, we got phished. I think both of these are internal. I think there's like poor cops in South Korea that just want to get ahead, and they are savvy enough to be able to do things like fake a phishing attack, and in this case, steal the Bitcoin off of a USB drive without actually accessing the USB drive, which means that they, during the handover of the USB drive, probably also got a 12 or 24 word seed phrase, and the guy's probably going, I'll just keep this in my pocket for later. Yeah. On to Russia. Daily crypto volumes reach $650 million a day. Daily volumes, $650 million in Russia. Holy shit. According to news outlet RBC, the Russian Finance Ministry and Central Bank are pushing the government to accelerate the introduction of regulations for the crypto market after it has emerged that citizens spend nearly 50 billion Russian rubles in cryptocurrencies every day. According to statements made by Russian Deputy Finance Minister Ivan Chebysky, or Chebyskov, during a digital asset discussion at the Alpha Talk conference, most crypto transactions occur through unregulated channels. Quote, we have always said that millions of citizens are involved in this activity. We're talking about trillions of rubles from the perspective of citizens in use, in savings, Chebyskovs said. The daily volume of 50 billion rubles cited by the deputy minister corresponds to an annual turnover of over 10 trillion rubles. That's about $130 billion US. Quote, this is a turnover that is happening outside the regulated zone. Outside of our attention, the government official emphasized, highlighting the need to bring this market under regulatory control. Let's pause. What does that mean? They want their cut. They're thieves. They're organized crime, and they want their cut. And all governments are the same. It's not just the Russian government. All governments are acting this way now. The United States government, the Brazilian government, the Canadian government, Argentina, Australia, New Zealand, India, you name it. It doesn't matter. They're all thieves, and they should all be thrown in the volcano, tied together so that they cannot get out until they hit the boiling magma below and instantly fried into little chicken drumsticks. Let's continue. The data demonstrates strong crypto adoption in the country, which is grappling with economic sanctions imposed by the United States and Europe. The European Union recently raised concerns about Russia's use of cryptocurrencies to circumvent sanctions and is pushing to, quote, ban all crypto transactions with Russia as part of a new sanctions package. At the end of December, the Russian central bank released a policy proposal to allow both qualified and unqualified investors to purchase certain crypto assets. The proposal includes strict limits for unqualified investors, allowing them to only hold up to 300,000 rubles or about $4,000 of crypto annually, while permitting broad market access for qualified investors, including privacy coins. Vladimir Christoyukin, first deputy chairman of the Russian Central Bank, expressed hope to see crypto market regulation adopted by the government in the State Duma's spring session. Quote, we would very much like to see the government see the law adopted in the spring session. I hope this is a possible consensus decision, and this will provide an opportunity for the transition period for market participants to obtain the necessary licenses. Yes, of course, because you're protecting the people, right? Wrong. They're not. They're stealing from the people. They view the people as cattle. They do it in every country in the world that has a functional government. We've allowed, through our apathy as the citizenry of the world, in every single country, the very worst, most pathetic, most sociologically challenged people to get to the highest levels of control, because we keep chasing the almighty dollar or the almighty, pick your fiat currency. We've been pitted against each other since at least the 1980s, when you started seeing shows like Lifestyles of the Rich and Famous with Robin Leach. That show was designed to create anger in the masses. It was not Robin Leach's idea that he just wanted to, hang out with a whole bunch of rich people and show off their houses and their yachts and their lifestyle. No. It was designed to show to people that don't have that kind of money what having that kind of money looks like. How would you not generate anger, jealousy, envy, the whole nine in the masses of the people? And what did they do about it? Well, they can't get to these people, so they have to figure out, how do I get that? How do I get the yacht? And then what you end up with is a shitty car in front of a McMansion that's built like crap, that will literally disintegrate starting inside of 20 years. And you're lucky if it lasts that long. That's why these people are able to continuously do what they do. And we're starting to see, with the release of the Epstein files, just how bad it is. You would have thought that the Epstein files was just going to contain the names and places of the engagement of, diddling small children, and underage women and probably boys as well. Who knows? But it contains a lot more than that. It contains a lot more than just that. People were expecting we'll finally get to see who flew on Epstein's plane. Yeah, we already knew who flew on Epstein's plane. We've known that for years. We've known several names of people who obviously went to the island. We've known all this. That little black book that people say, when are you going to release the black book? Dude, that black book's been released. That black book is completely unredacted, and I actually have a copy of it on my machine that I made 2 years ago. That's how long that, is it Ghislaine? Yeah, Epstein and Ghislaine's little black client book. I've had that thing on my machine completely unredacted for 2 years. The entirety of his client list has been released. You didn't need to wait for the Epstein papers. What we are actually finding out is just how deep the rabbit hole goes, not for the people diddling little girls, but for the surveillance state, how bad it is and who's involved with that. That, to me, was a complete surprise that any of that would actually be part of the Epstein files, which, again, just continues to fuel my amazement that this one man, Jeffrey Epstein, had this many connections, this deep into what you would necessarily have to call deep state activity. How the hell he got there is anybody's question. And nobody is still, to this day, nobody is clear how he got his money. We know how he got his money later. We know who he was dealing with, but how did he get? It's almost like watching Schindler's List, where you see the guy off the street pawn a watch, a handful of jewelry to get enough cash to, basically fool the Nazi party into believing that he was actually someone. I would imagine that this might not be too terribly far away from how Jeffrey Epstein did it, unless he was full-blown something like Mossad or CIA from the get-go. Who knows? I have no evidence whatsoever that he's with Mossad, CIA, or MI5 or MI6. I can't remember which one is the intelligence part of the UK. It doesn't matter. What's in the Epstein files is freaking scary. And even though that, sex trafficking of children is terrifying and horrifying, it's not the only terrifying and horrifying thing that's in those files. It is a menagerie of just how long and how far people in power have gone to screw over the citizenry of the world. Not just the United States, not just Israel, not just pick your country, all of it. Everything. It's sick. It's almost a complete unraveling of an illusion. And honestly, I'm here for it. Burn it the fuck down. I will see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.